Good morning, traders. Welcome to the Flow Show, Tuesday, 22nd of October. Another bit of a quiet morning as we got yesterday in Europe. Maybe it will liven up again once we get into the US session. Got a bit of fun and games yesterday. Morning, Mr. K, man. How are you holding up?
Good morning, Ryan. Good morning, everybody. Yeah, I'm doing all right. Thank you. Watching the game, not having a beer, not at this time of the day. Yeah, just ready for whatever politicians of all boards can throw at us, mate.
Yeah, very much so. Right, let's get through the news headlines. Not that there's an awful lot, but we'll get them out of the way nonetheless. Over in Japan, BOJ's Kato says we want to extremely and thoroughly gauge the US economy, elections and Fed policy. And then said we are not targeting FX levels, but are carefully looking at upside risks from rising import prices. So those comments may be giving us a bit further insight into the thinking at the BOJ as we head towards their meeting. Bit of minor data out from those guys. Core CPI, or the BOJ core CPI measure that they like to produce, came down to 1.7% from 1.8%, and obviously like that much higher. The BOE squawkers have started their blathering this week. We had BOE's Green speaking yesterday saying that a cautious and gradual approach to rates is appropriate. She was a bit all over the shop in comments, or how they were pertained, shall we say, from the story in the FT. One of the comments says that the risks of weaker consumption, or one of the risks of weaker consumption, is seeing below target inflation. For that to be the case, it would necessitate more rapid rate cuts. So she's in favour of a gradual approach, but can see a situation where more rapid rate cuts might be necessary. The whole piece was full of maybes, could be's, ifs, buts, and whatevers. German Chancellor Scholz looks like he's blaming everyone else but themselves as to why their economy's in the shitter. He says the EU has got carried away with regulation, and that most bureaucratic requirements come from Brussels. It's actually Germany who wanted those regulations, and a ton of those regulations particularly being put on other countries. So all things go around, come around. So he's getting kicked in the arse with that lot. ECB's Casimir, one of the hawks, says October cut leaves December meeting wide open. He said if there's an accelerated pace in disinflation that's confirmed, we will be in a strong and comfortable position to continue the easing cycle. Fed's Logan says looking at a more gradual cuts amid more balance sheet cuts as well, so no need to slow up on QT. Says the Fed will need to be nimble with monetary policy choices, expects gradual rate cuts if the economy meets forecasts. Fed's cash and carries doubling down on his crypto comments from last week, where he said, I think it was last week or the week before, where he said that crypto is still useless. He says very few transactions happen on crypto unless it's drugs or illegal activity. Not a fan. Talking about more important things, says immigration policy will affect our reading of the labour market. Going forward, the Fed will look at all the data to decide on its policy for rates. Says he sees evidence of quick labour market weakening, or if there's evidence of quick labour market weakening, that could lead to faster cuts. But currently, he only sees modest cuts over the next quarters. Fed's Schmid has said he's calling for cautious, gradual and a deliberate approach to rate cuts and prefers to avoid outsized rate cuts. Fed's Daily, Fed will continue to adjust its policy. The 50 BP cut was meant to right-size policy, and that we should expect additional cuts going forward. It says the 50 pip cut was what was needed, and she didn't want to find out they had over-tightened and taken jobs from people. Mexico is potentially thumbing its nose at Trump and his tariff plans because they are considering tax credits to attract foreign firms to invest in Mexico and produce in Mexico. They're targeting electrical vehicles, semiconductor and rare earth materials, battery and electronics sector. That's according to some top trade official in an interview. Basically, what they want to do is replace imports from China, Malaysia, Vietnam, and Taiwan. Now, there's really a few sides to this. We know that Trump wants to slap tariffs on any products produced in Mexico that then come through to the US. Part of the reasoning behind that is that Mexico is a bit of a gateway from other imports from the likes of China and the Far East coming into Mexico, get tinkered with, and then get sent on to the US. So while Trump may look to slap tariffs on Mexico, there may be a deal on the table if Mexico is also looking to block imports from those Far Eastern countries. There may be some allowances for things actually produced in Mexico to get through to the US. So we know that Trump's going to relook at the USMCA, that trade deal. So it's not a done deal that tariffs will go on to Mexico, slapdash, and be done with it. There's probably going to be a bit of tinkering inside of that. Kay, I wanted to ask you about that because, as usual, it's probably not just as straightforward Trump tariffs on Mexico as the headlines project.
That particular one may not be as straightforward, Ryan, but we know by now Trump is one of those who likes to hit first and then asks if it hurts, right? And that may be the case. That is still going to be the big risk going into the election if Trump gets it. It may be a case of hitting and then scrambling back. That is something that we need to very closely monitor. Obviously, if they would find a deal, no matter how good or bad or very much less good than it may be actually for Mexico, it may come out. There still will be an impact on the Mexican peso if they manage to find whatever deal. Okay, but I've got there is this very high chance that he slaps the tariffs on first, and then they says, "Oh, you want to negotiate them? Okay, let's go and sit around the table now." But he may first hit and then speak.
Yeah, no, I agree with that. I think that's exactly how it's going to go. If he wins, the Mex is going to get slapped, and then he'll stay on his policies, and then they'll sit down and discuss this USMCA thing.
Yeah.
It was him who dreamt it up, wasn't it? It moved from whatever the prior acronym was. He created the USMCA, didn't he? And then
they renegotiated the prior one. Yeah.
Yeah.
I don't recall the name right now, but yeah, he completely renegotiated the prior one, which in the end actually was not too bad for especially Mexico. Of course, at the same time, there was the talks about the walls, but that the investors have shrugged off the migrant situation. But yeah, it was him who wanted to renegotiate the whole thing, and it actually worked out not too badly then for both, especially Mexico, but both Mexico and Canada. But now we are like a number of years later, and he's probably seen that there is too much flowing through Mexico coming from the likes of China and other countries on which he would like to slap tariffs.
Yeah, thanks, mate. Goldies, they're talking about the election as well. They think the euro could drop as much as 10% under Trump tariffs and domestic US tax cut scenarios if the McDonald's worker gets in for that. So they're all really fishing for what they see as price moves. And this has been a bit of a reminder, maybe something that has also been affecting the loonie or the Canadian dollar, is the politics situation in Canada. It's still an ongoing mess over there. The latest is that Mr. Mark Carney, formerly of the Bank of England, has put himself forward to lead one of the opposition parties or something like that. I haven't paid too much attention. Do you think, Kay, that the politics over there is maybe impacting the CAD a bit more than maybe we're thinking?
Yeah, yes. And the fact that we are also entering that sphere of the elections and all of that seems to be one big pot right now. And we've been speaking about that, and we've been chatting about that in our chat room as well. For the people who wouldn't be with us yet, we are chatting about all those things very, very actively. It is a fact that we are now there's this big melting pot of stuff going on, and sometimes it's hard to know exactly what is driving at what time, but it does feel like all of this is coming into the equation. I think it's been weighing on the CAD. We've been focusing on the Bank of Canada and on perhaps data, but we've seen sessions where it moved against the data, especially when they printed that really good labor report, and it's all part of the political games that are going on right now as well, and that is something that if Canada is getting tangled up in more external affairs, it could potentially, without without any Bank of Canada considerations, it could actually drive the dollar CAD, the dollar versus CAD higher to 140 after all. Even if the rest data and so forth wouldn't be supportive of such a move. And yeah, it's getting increasingly cloudy about what is really the driver at what time in a lot of those currencies. Of course, the mix is a bit clearer, but then looking at the other stuff like the Canada, which is not always that obvious, yeah, it could actually be part of it, as you say.
Yeah, and on top of that, the same thing as with Mexico, Trump getting in and trade deals and whatnot. It's all in the pot. I think I agree with what you said yesterday in the chat room, and it looked like a perfect example in markets yesterday. We are right in the orbit of the election now, and yeah, I think the perhaps the safest trade is going and running off to the hills and hiding in a cave for 2 weeks and coming back afterwards, because all this could get really messy now in markets.
Yes, and also, Ryan, what we've seen, the banks coming out with their playbook now for the elections. It's going to be dangerous because, as we see now, and we take the example of the mix, we can take the example of the Canada, you can take the example of dollar China, for instance, that is gradually moving higher, but then you have like a bit of Aussie attached to it and things. It all looks like one big pot that speculators or people having to manage books like asset managers are preparing for. And then I'm starting to have the feeling that we are in this massive build-up. You see the yields are going higher as well. Bonds getting smacked in the US and by deduction in the rest of the countries as well. But I've got the impression that a lot of elections moves may already be done before the elections, and it's going to get very dangerous to have positions for more than a couple of sessions. I would say you can trade the pre-election trade, but then be careful what happens once the elections have happened. Like, for instance, you were mentioning about Goldman Sachs, but then we see Goldman Sachs thinks that on a Trump election, the dollar could rise 10%. The JP Morgan says if it's a Trump, if it's a red sweep, euro dollar trades down to parity. Yes, but we are already partially trading those kind of things. Of course, that there is the uncertainty about the elections, but I would like to already warn our viewers that come election day, if those trades have already been massively traded, that you could be in for a nasty correction and surprise once the elections are done. So I think from now on we need to trade the election trade if you want, but beware of the even a couple of days before. That's something which we see sometimes when important data come out. For a while, you're trading. Let's say, for instance, you're buying dollars because the jobs market is doing extremely well. But then on the day itself, or the session just prior, you all of a sudden see a correction to the other side because all the front runners have already or are already taking profit. And I guess that the further we get into this election vortex, the more of those kind of moves we are going to see now. And yeah, trying to explain what happens in currencies may get a little more difficult.
Yeah, and we've got to remember that unlike a lot of elections, it isn't a wake up the next day and everything's done and dusted. Whoever's wins, it can run to January before the new term starts, and it's a bit different if the Democrats remain in power, because it's then more of an ongoing process. But if it's a changeover, then there's going to be a lot of uncertainty between the end of the election and the inauguration date in January, so that can drag things out. I think what a lot of traders have got to look at, you've got to look at this period sort of in isolation. Okay, you may see some funky moves. 10-year yield rising to 4.5% would completely go against what the Fed's doing, what the economy is doing, what rates are likely to do. But that is a focus of the markets, pricing an extra premium, whatever you want to call it, shifting money out, closing positions, whatever. So it creates a false narrative, if you like, market moves versus fundamentals. And there's probably a time where it's not going to be the right time to fight it. So you've got to take this election sphere in its own orbit, its own aspect, if you like. And so you can't apply your usual thinking like you would for any other time in the market to the election, because it's a one-off event. So it's going to create all these price moves. So don't get caught up in what's happening and think, well, this is going to change the world, because once we're over the election and everyone knows what's going to be coming, then things will revert back to the fundamentals, and whether the new government, old government, is going to produce new fiscal measures or growth measures or whatever, and then the economy ticks along from there. So just saying, be careful. Don't believe most of what you're going to see over this election, and just trade that way accordingly. Like Kay says, don't marry a trade, don't fight a trade if it's looking very strong, even if you don't agree with it. The market is going to do what it wants to do around this, and you just got to be careful about trading it. Right, that's it from the headline front, unless you've got anything else, Mr. Kay.
No, not really. Just people be aware that we are not only trading this, but there's the BRICS summit started today. We have the IMF meetings going on. We have the G20 also getting underway later today. So there's a lot of speakers coming our way in the next few days. Just again, the same warning is that you can see some flip-flopping on whatever they may say out of those in those summits, but just know that very rarely, seldomly, there's been real decisions taking on those summits. Okay, so those moves, if they are a continuation of what's happening, like technically also fine. But if they kind of throw up like small algo moves, counter moves. Just be aware, we may not be changing trends at all. And Ali, if the BRICS summit is helping gold, I don't think so. The BRICS is, you could say that it is, because the BRICS is a counterweight or counterbalancing whatever G20 or other organizations may be or mean. But it's for the time being, we are rather trading the geopolitics, the already how shall I say, the uncertainty about the upcoming economies. If that is the Trump trade, that is what is trading right now, more than any of those summits that we're having on this week.
Yeah, thanks, mate. And gold is where you might as well start off then, seeing as we've got a bit of action going on there. It decided it wanted to top out in that 2740 area. I did chuck a couple of lines in yesterday where potentially support might want to come in. We hit one of them, give or take a buck, half a buck. That's around 27, 13, 14 area. Quite decent bounce from there. We've pulled up shy of testing this 2740 level so far today. So this, again, as I'll always like to tell, these sort of things are just a bit of price discovery. See where the levels want to show up, just like when they showed up here and gave us these ranges. We might be heading for a similar position. If we continue to resist this 2740 area, that's going to tell us the market has had enough for now, however long that may be, and then we need to see where support comes in. We know where the main support levels are. They're down at these break points. So those are your most important levels. From between here and this high, you have to see what develops. Get another test down here, and that will really reaffirm this level, make it something we need to pay attention to, and then we see what happens in the ping pong. But we'll probably get a few little moves under and whatever. So we might need a few more sessions before we know where the real levels are. If we go and do a similar move to here where we have a high and then we just go and knock it out by 10 bucks and then come back into it, it's a lot of this is just pattern recognition, seeing how prices react to levels. That's how you know how to trade them. That's why I wanted to trade the break trade here, because of all this price action was building. Couldn't get through. Eventually we get through again. So I'm going to look to do exactly the same exercise here. If I see 2740 resisting a few times, then I'm going to think about trying another break trade for if we keep testing it, because if it does break, then we might be off and running again. But in the meantime, if you want to try and pick your tops, this is a candidate at the moment. You're not going to give it 50, 60 bucks though. If you're through it by 5, 10 bucks, then you're wrong. But as I say, this is where you want to let the price action build up. These will give you your places to trade, not the I think it's gone too high or I think it's dropped back too low. Don't think, feel, as Bruce Lee once said. What are you up to today, Ali? And Kay looked at we all looked at some of the trades yesterday.
All Ali's positions yesterday. We
we had a look at all of them.
We must have been busy chatting in our chat box there.
Yeah, exactly. So now you're long euro dollar. Well, that one, it's still messing around this zone. Okay, it's still undecided, but it's still looking bearish. Okay, so we had this hold here. We got under 108.30. We had a little poke above. Now we're back under it. 108.10 into the big figure is the support area. So the fact that we're not getting close to this 108.70 area suggests that we are willing to push further downside. But we know where the marker is now, 108.10. And then we've got this other little zonette, which is more of a short-term zone around the 108 big figure, as you can see, just where we mess around a bit. But through here, then I think we're probably going to be looking at 107 and maybe fairly quickly. And then that will give us something to look at. I may be looking at area for a bit of a counter move just because this has gone far too far. Not gone too far, but it's been a very, very strong one-way move. And you don't often get those strong one-way moves with a bit of reaction there. It's probably going to match this move up to 112. Is that a wonky head and shoulders forming there, Kay? A double-headed head and shoulders back up to 109 and then down again?
No, no, I wouldn't. You can always have double heads to go back up to 109, 109.70 and then start to go back down. But in another, yeah, I mean, you can always make your charts say what you want them to say. But if you look at there is this kind of letter M formation going on, and that will complete around 107, that prior low there, 107.75. So just looking back at what Ali said, long, okay, I'm not going to discuss it, but your stop is at 87. If the M completes, we're going to be looking at 107.75. So your stop may be a little ahead of the real support level. That is one thing. And on the other hand, I don't really know why. Well, at least myself, I don't know why we would buy euros right now. Just looking at that infamous Trump trade, it's not the way the market will want to position. So there's a bit of a risk, and also we've gone back slightly in that 108.30-60 zone and capping relatively quickly. So I'm not sure whether that's the best trade right now. But of course, I mean, we're not here to tell the people what to trade. Just if you want to comment on the stop level, I think it's that tad either too far or not far enough.
Yeah, I can agree with that. I mean, Ali, let us know where you get your levels from. Are you picking them off, tech levels, chart levels? Are you what? It might make it a bit easier for us to get inside your head. I certainly wouldn't be buying it at 108.20 because it's done nothing at 108.20 at the moment. But that's my viewpoint. Kay sometimes has a slightly different viewpoint. We all have different viewpoints. Jacob, it seems 109 is coming, does it? Can't get above 108.70 at the moment. We're struggling to stay above 108.30. So, again, what scenario do you see 109 coming? If it holds down here, quite possibly into this support, and we do that a few more times, then we might see 109. But is it a surety? Who knows? That's the fun of trading. Yes, mate, go on.
We're going to need a headline, I think, to bring it back above. And in the meantime, Jacob and Ali as well, just keep an eye on that 108.30-60 zone. If you start to get back above 108.60 and confirm through 70 or so, then I think we're on our way to 109. But for the time being, we've corrected 20-25 points from the lows, and we're already nearly back to the lows. So that doesn't tell me that we are ready for a big rebound. Could come, but I equally don't see what is gonna drive it right now, unless the market is tired of buying dollars. But if you look at some other dollars, they may not be yet.
Yeah, and not that I disagree with you, Jacob. You're saying if it holds, you can try along with a small stop. Yeah, it's done here what it hasn't really done throughout much of this move down. It's held decent support twice. If you look at all these moves down, we've hit support, broke, hit support, broke, hit support, broke, all the way down. And now all of a sudden we've hit support, bounced, come back, hit support. So yeah, it's doing something here that it hasn't done since the move from 112. And, that creates your trading opportunities. You can try longs down here. Pick your poison. Do you try off this 110 area? Do you try off 108? Do you split a trade maybe down to this low here? 107.75, 77, whatever it is. You can go some small pieces, try and see if this is where it's going to hold. It's your risk below here, you're wrong. So you don't need to go a lot, but that's what you want to be looking for. Just the difference in price action to what we've seen over the past few days and weeks. This is looking at the moment a bit different, but get a third test here. Maybe you get your bounce to 109s. If we go through though, it's going to continue this pattern, and then you might have to pick your spot where to go long. But Yeah, I have to admit I'm getting a little bit like, do I try a little one down here at these lows? But I'm going to keep an eye on these damn yields and what's going on. If we're in this election zone, you know, things can go far more irrational,
Yeah,
as we know, and that I think is the risk at the moment. It's not going to happen all in one straight line, but we're going to get moments. But we've got 2 weeks to the election, so if the market is jockeying around now, it can do a lot more. Yes,
that's
mate.
exactly it, Ryan. I mean, the thing yesterday we were talking in our chat room about Mark was mentioning the bonds, what's going to hold it back from trading lower, and we're trying to find a few reasons, but then you wake up this morning and they're back a bit lower, so the market is still very much in that Trump version 2.0 trade right now, but and it can go a lot more irrational than we can remain solvent if we want to start counter trading it. What I do think, though, is that post-elections it's going to be a massive counter trade if it's even if it's Trump. But for the time being, it's very hard to fight it. So for me, it's more about really timing than levels. And if you trade levels, obviously everybody wants to trade levels. And if you trade levels, just bear in mind that don't fight it, okay? And if you're right, also do take profits when they come around.
Yeah, it's not that we're trying to discourage anyone from trading or anything like that, but I often use the example. It's like jumping in the sea. Okay, you want to go for a swim. Do you jump into a rough sea or do you like jumping into a calm sea? If you jump into a rough sea, you take a bit more precaution. You be a bit more cautious, and the same thing with trading. If you're jumping into markets that a bit uncertain, got a bit of volatility, then you factor that into your trading. You maybe go smaller size and you keep your risk a bit tighter just to protect yourself against the conditions. But you've all got your own levels, you've all got your own charts. You want to trade away. That's what we're here for. So yeah, Matthew, lots of commentary now emerging that 10 years could hit 5%. Yeah, there is. See, I think getting up to 450, somewhere like that, is a bit of overkill. That'll be something I would potentially look to counter, whether it's yields or whether it's what the dollar's doing or whatever. Because there's going to be, or there's potentially going to be moments where certain assets are going to move so far out of kilter with the underlying fundamentals that it becomes worth having a trade. Would I try it here? Probably not. I'm looking more closely at 2-year yields. 2-year yields up at 420s, 425s, that puts it in the zone of where the Fed's cutting to. And if the Fed are going to keep cutting to, 3%, that makes yields at 2-year yields at 420, 425 massively overpriced, if you want to call it that, or underpriced if you're looking at the price component. So those are the sort of counter trades I'm going to be looking for. Do things move so far out of kilter with what's happening in the real world or in the underlying economy that becomes an opportunity? But I'm not right yet feeling like I need to start fading some of these moves because, as I say, I think there's more to go. So could be I miss it if it doesn't go where I want it to go, but that's life. You have your areas, you have your places you want to trade, and if you don't get there, you don't trade. Those are my rules, and those are ones that have done me well so far. So those are the ones I'm going to stick to. So yeah, can 10-year yields go to 5%? Absolutely.
Yeah, I think so.
Would that be overkill? Absolutely.
Yeah, fully agree. And I'm in the same boat. I mean, I rather miss one than take it up the lederhosen, as I please to say. Let's just come back a minute to, and I'm seeing something here. Yeah, Matthew was saying about the big spike in volatility, and indeed, Matthew, and that rejoins what we are saying here as well, that the market can go further than what is reasonable, and there is a real risk there right now, right? But okay, first things first, perhaps let's have a little look at what's happening today. Oh, there is your oh, there is. Did you Are you letting gold slip away, or because now you're talking about the euro dollar, it has a fundamental short bias. I actually agree because and it actually has been trading a little bit against my own bias for a long while, and now it looks like the Trump trade accelerates the fundamentals of the euro, because I always thought that the euro was eurozone was underperforming whatever happened elsewhere, would it be the UK or the United States, and does seem now that the euro dollar is accelerated as well by its own fundamentals and ECB. We still have to not forget that the euro rates are about 1.5% below those of the US, although FX can very rapidly undo the differentials, of course. But yeah, I agree. I think we can go and have a look at in those 107s. That's what I thought would actually happen, even without the elections being ahead of us. But yeah, we could see a nasty acceleration going into the elections, unless we get then afterwards that huge surprise. Okay,
Yeah.
what else are
It'll
we
be.
looking at today?
Yeah, I agree with Devaj. You know, it's got a fundamental short bias, but look where it was a couple of weeks ago. You know, it didn't have a short bias a couple of weeks ago. So this is again, this is where you need to just have a little look around for your time frames and see what the overall picture is. You know, here we are pretty much bang in the middle of this range that we saw 2021, 2022. Okay. We've got this 105, 104.50, 112 range at the moment. Okay. So longer term, what's the bias? Pretty neutral. So factor that in. It's going to take something special to break us out of either side here. And that's likely either the Eurozone doing really shit or the US data going backwards a bit, jobs dropping or something like that, or doing much better, or the Eurozone doing much better. So just keep an eye on the wider context as well as getting, reading what's happening on a shorter term basis. Right, Mister. Let me pump it over to you for a bit because
Hmm.
there's not too much tickling my fancy today.
No, no, neither am I. Just I've actually I need to apologize to the people in the room, because I'm busy on so much other stuff that I forgot to even update. I'm just small scalping still, big long dollars here and there. But I just noticed this one today, and that's a long term. Okay, that's a long term cable, and since we were talking today about those what we think and what may happen and going, so I thought this may be an interesting one in the longer term. We are on a bit of a zone here. We know about the 129s as well, but look at the very longer term. We have this kind of a trend line here, and that's coming all the way from 2014. And I reckon that if we get like some problems or so that the market may see with the budget, this one is around 127.70 by the time we are going to get there, probably. And it's a very interesting little area as well. So we have been talking in the past about this 128, but now I see this trend line seems to confirm. You know, we had a couple of tries to get above, and then when it happened, really, we flew another 6, 7 big figures. Keep this one in mind for the more longer term, somewhere around 128, 173 quarters. Okay, I think if we ever get there, it's about 200 points away. We never say never in this market, or if the investors don't like what Reeves is going to tell us. And we have Bailey as well speaking 3 or 4 times this week. So that's for the more medium term in the cable. Keep an eye on that one. All right. In the shorter term, I would say, on the other hand, we are still in a bit of a move higher in the more little bit shorter term, where support is going to come in around 129 the figure. So that's your nearest, if ever it breaks here around 129.70. We're trading on it. 129 the figure is going to be your closer to home, bigger support level on the cable. note what we've done here. We went for a little bit of a retest last week of this 131 and failed. So this is going to be the level. This is one of those bigger levels that you have to make a note of. 131, figure 10, figure 15. If that would start to go back up above in cable, that means that the investors like what Reeves is saying on the budget, in my opinion. So those are your more wider levels. And then let's go back to the yen for Mr. Especially special for Mr. Simon. So I've been saying this for a while, okay, that we could go back to the 50% at 150.80. Been saying it on the flow shows, been saying it on F.A.C.E. So here we are. We are bang on the level right now. We also know, and that I said yesterday, that the top end of the daily cloud comes in around 150.70. It's going to hang around the 65.70 for a number of days into the end of the week. So we are on interesting levels right here and now. And then if you look at what's happening since we've broken this trend line here, break, retest, even went a little bit higher, but then failed and went all the way down to 140. We are on the approach here. That lies around 150, 130, where the 200 DMA comes in, and then we are going. We are looking at this 152 again. It is a very big level, as I've already mentioned a fair number of times. For months, it's been a big level now, and it could be the build-up. It could be, I say, the build-up of a symmetrical head and shoulder coming now. The problem is those elections in Japan, and it does seem like analysts now and people looking at those elections, they really think that there may be an issue there coming from Forex Shiba, and that some of the smaller parties, which he may have to find support from to get a decent majority, are in fact a little less hawkish. And I think that's what the market is now trading as well. Not only the pre-Trump dollar trade, but also the pre-Japanese election trade, and that does not seem to be extremely yen bullish right now. Now, obviously, if we're going to get in the we're going to get into the elections and see, but that's for the start of next week. See Ishiba actually getting a more comfortable result, then I guess we are going to shy away from those important levels. But before we get there, I have the impression we are going to test those important levels. And if you look at the dollar in some areas, it could even be that we overshoot, and then we are talking about 153, 153 and a half. Do I think that will be enough? I think 152 should, in theory, already be enough. But we know how the market trades in the yen. It goes rapidly, all right? And if you look at the really short term, we are trying to break above this channel, which also comes in around 150.70. So on the day, we may already be very close to support. It's too comfortable for me personally, for comfort, this kind of so close to the market support, because as we have seen in the whole process of going up, we have seen spike coming down, spike coming down. It's an eternal repeat in everything yen. So can we come back down to around 150, 149.80? Yes, of course. It would only be another one of those setbacks, and before we then push through. Now, I know a lot of people are looking for the top in this dollar yen. I haven't. I've actually tried to accompany this move a little bit. I still think the risk is that we are going to test 152 before we actually hit the elections in Japan. The Bank of Japan seems most analysts saying that well, everybody is really saying that they are not going to move this week. Ueda is in at the G20, so don't dismiss any potential comments from him as well. And obviously, getting closer to that 152, I do think that the Japanese officials will get a bit more vocal as well. So we have to be on our toes. But do I think we're going to get there? Yes, I do think that we could actually get there and have potentially even a little overshoot, but that'll depend on more of the polls in Japan right now. So that's a bit what I'm seeing on in the dollar yen right now. Now, for this to come down in the meantime, back down to, for instance, for a starter 149.40 or below, I think we need a little bit of a reversal in all things dollar. That the dollar will, to go down, the dollar will be the driver. To continue to go up, I think it's the yen and the upcoming elections. And with that, Ryan, back over to you, my friend.
Yeah, thanks, mate. And I actually think that this yen is a little bit like what we're going to see for or are seeing for the US elections. So, you know, just talking to Matthew in the chat, he's looking to you know, maybe hit it 152. Are you going to hit it at 152 on a Friday night before the Japanese elections if it's trading up there? You know, that's where you got to take things into context in terms of your risk. You know, there's a lot of people looking at that 152 as well, so it's a big fat target at the moment. So if everyone trades it, there's going to be some humongous stops, and you know, obviously there's gap risk. You know, we could open up at 153 on Sunday.
Yeah.
So it's, take it into consideration. Any other time without all this going on, fine. I'll probably be joining the queue to hit it at 152 at least for a first try. But yeah, if it's a Thursday or a Friday, no, thank you very much. And I'll sit back and see what's going to go on.
Yeah,
Right.
and about what Derej is saying, expecting interventions. If we start to really fly away, we really cannot rule them out. There is potential for, or risk for interventions. Imagine that we're trading 150.80, that we open on Monday 154 or 155. The risk of intervention is sky high, right?
Yeah, exactly that. Exactly that. Risk. That's what we've got to think about, traders, how big that risk is and how it grows and how it dissipates as the events dictate. Right, we'll call it a day. Thank you very much. Anything to look out for today is the Philly Fed Services Index, which as usual is not on any calendar. Oh, it's on the Bloomberg have finally put it on their calendar. I see. So we've got it on a calendar for once. Have a good day, everybody. Thanks, Kay. We'll see you all tomorrow.